Thank you. Everybody can hear me? Okay? All right. Good morning, and thanks for being here, and thanks for letting me come talk to you and share information with you. As Lizzie was mentioning, I'm going on about 27 years here at the office, getting close. It's hard to believe that when I say that out loud, but first part of my career was with state agencies, and for about the last 12 plus years I've been working with local government out there. We're an advisory services team within local government services in our office, and what we do is we go out and pinpoint and help identify areas that need improvement, problematic areas, and talk through resolution with you. And I tell you, it's been very rewarding. I always say that when I have these talks. It's been great to get out there and, experience failures and experience successes with you. And I can tell you, people in advisory services and people in our office, all the way up to Mike Wagasback, when we hear that y'all are successful, we're very happy. That's what we want. We consider ourselves part of the team with you out there in local government, so we're happy when you're successful. And I say that because today I'm going to be sharing information with you, better information for a better Louisiana, right? I'm going to be sharing information with you. I'm not preaching at you. I'm not lecturing to you. I'm discussing with you as a team member. Yesterday's speakers, I got to come in the afternoon. I had to go to the office in the morning, but when I got here in the afternoon, I kept hearing this team. Everybody's got to have buy-off. Everybody's got to be on the same page. And that's what we consider ourselves in the Legislative Auditor's Office, team members with you out there. And we want you to be successful. So I'm going to share a lot of information today with you, but like I'm saying, we're discussing it together so that you can be more successful, and I think it will help you to be successful. Today we're going to talk about tools for identifying declining or poor fiscal health, characteristics of an unhealthy fiscal government or entity, the importance of fiscal health, strategies to become financially healthy, to stay that way, to get out of it if you're there. And one thing I noticed yesterday with the speakers as well, all the speakers that I heard, the theme kind of started rearing its head, and I think the theme of this presentation is there too. Financial and programmatic management and running government is complex, and it has to be a team effort, and it is a thinking person's function. Think through it, identify problems, act on those problems. Let's not let things happen to us and around us and just go with it. And so that's kind of the theme of it. Let's think, let's identify what's going on. Let's think about the cause, let's fix the problems. But it is a thinking person's game. Too many times I see where we hear that something has happened financially, maybe put in an audit or something like that, or something's going on in our locality, in our municipality, and we just seem lost. But that's because we have to focus more on thinking through issues, what are the causes, and what are the strategies to fix things. We've got a lot to talk about today, and in 50 minutes, there's not a lot of time, so I think the best way to do the questions, I'm going to stay here after. We can talk individually. I'm going to stay here as long as you need me to talk about questions today. The coordinator, the technical coordinator said they will email me questions, and I'm going to give you my contact information. You can see at the end of the slides. You can call me and email me at any time, but I will get those answers to you. I find in these big topics like this, questions are very customized at times, and it takes a little thinking through, discussion with you, and even some research to give you the best answer. But I promise you, we'll get you an answer. So let's start. So what are some good tools to help us identify declining fiscal health or existing poor fiscal health? And if you ever heard me talk before, you know I'm big on teamwork, and I'm big on using the audit as a business tool, as a business process. Yes, you have to get them done legally, and I heard one of the speakers talk about this yesterday, but more importantly, it's a great management tool. The audit is a great management tool. They contain financial statements and other financial information, which gives us a clear picture of current position and past performance. And reading through an audit tells a story, I always like to say. It highlights patterns, gives us a good idea of where we've been, where we are, where we're headed, if you really pour in to those audits. I always tell folks, and I remember when we went and talked with the sheriffs at one of their annual conferences, I said, embrace these audits and these auditors, because it is a business function that you are paying for, and it's going to give you red flags for trouble on the horizon, or maybe that's already there, and it's a blueprint for your success as well. Findings and recommendations are not bad things. Don't freak out about them. Use them. You paid for them. You paid for someone to identify areas that need improvement and to provide recommendations. Other tools that I like to suggest and talk about, I think that the audit finding in itself is a tool to understand what's going on in your organization. So here's a list of the top 10 audit findings, and I think we saw these yesterday as well, and you've probably seen them in other presentations too. But what I will suggest to you, if you see those audit findings there, take note. Remember, let's think through what's going on here. What is this really saying to us? Because if these are left unattended, problems will occur. They could already be there heavily. But when you start seeing things like inadequate internal controls and proper segregation of duties, I was so happy to see that the speaker, I think it was Charlie yesterday, was talking about segregation of duties. Sometimes we gloss over that finding, but that's important. We have to break up functions so that we're protecting the management of those functions from error, from abuse, from fraud, and those type of things. If you don't, you're going to wind up in a bad financial way. And you might already be there if this is a prevalent finding time and time again, and we're not thinking through it and doing anything to get rid of it. That's the important thing. Identifying problems is a good thing. Acting on problems is a great thing. Just looking at them and saying, gosh, I don't know how we could ever fix it. I just don't know. I got to go do this, that, and the other. Is not good. Okay, so that's, and look, like I said, not preaching to you or lecturing to you. I'm discussing with you. I understand how complex government is to run on a daily basis. So we got to kind of carve out some time to address these type of issues. But they're good tools to understand what could be going on or what's on the horizon, what has happened. Non-compliance with the Local Government Budget Act, that's the basis for municipal life, financial life. You have to have a good budget. We'll talk more about that. Inadequate grant administration, speakers talked about yesterday. Inadequate reconciliations, you're not reconciling your accounting records, so your information ultimately is not going to be complete and accurate and good information to use. Again, incomplete or poor accounting records and documentation. If you see these things happening, take note. If things aren't financially in a bad way, they could be going there. So late filing of the audit report, we need those audit reports, like I was saying. Failure to provide financial reports to the governing body. If you're not sharing good financial information on a regular basis as a management group with your board, that's a sign that it's not working as well as it should be. We need policies and procedures, non-compliance with bond covenants, non-compliance with open meetings law, and we had to put one more in there. I wanted it to be the top 10, but I had to include 11, so I put one more in there. But failure to file and pay payroll taxes timely. When we see those findings, I know I take them seriously when I see them, and I start asking myself what's going on. They're fixable. That's the thing. They're fixable, but we have to use them as a tool, right? Again, more about the audit. It contains conclusions of the auditor. It may point out fiscal problems very clearly, like a going concern. They're worried if you can keep going as a viable entity. Again, I'll stress it, auditors, the audits, the auditing process, not bad things. Don't freak out about it. It's a business process. If the press comes and says, hey, you have 20 audit findings, that's terrible. Y'all are all terrible. I can't believe you let that happen. Your response should be, this is a business function. The audit was done to pinpoint these areas, and we're working on them. We paid for this process. When they find things, we're gonna use what's in there as a tool. This one right here, I put, when's the last time you curled up with a good book and scratched it out and put this audit here to draw emphasis? I mean, who wants to curl up with an audit? And Eric Sloan, who used to work with us, said, an audit can put you to sleep real quick. But I want to suggest to you that it's very important to carve out time for yourselves. I don't care what position you are in the organization, to read through the audit. Give yourself time to read through it and understand it. Talk with the auditors, please. The most important thing as a tool. Talk to your auditors. I can't tell you in the last 14 years how many people I've talked to that didn't understand what a finding meant. And when I asked them why not, they said they were just kind of embarrassed to talk about it. They didn't want to seem like they didn't know what was going on. And I said, listen, it's not bad when you don't know what's going on. It's bad when you just don't ask. There are no stupid questions in complex management. And that's what you do every day. You're managing complex entities. So talk with your auditors. They're great resources. They're great tools. And remember, fixing the findings, don't freak out about them. It's a team effort. It's your auditor, it's management, it's the board, and it's us. You can call us at any time, the advisors. We love to answer questions. Jennifer and all of them, Diane, everybody's there to answer your questions. If we don't know, we'll tell you we don't know, but we'll get the answer, okay? Interim financial information is crucial to identifying problems. Producing good, complete, accurate, reliable information on a regular basis is going to help you monitor where you are now and where you're going. So that's a tool, or those are tools that you have to be utilizing right now, okay? A balance sheet, income statement, profit and loss, accounts payable, what's owed to us, accounts receivable, accounts payable, what we got to pay to folks, accounts receivable, what's owed to us, the balance sheet showing us a snapshot in time of our financial condition, income statement is presenting your revenue, expenditures, net income. We like to see when they have a budget to actual in those documents. But the point of it is, those are tools to use to make sure that you're fiscally managing your organization correctly. And look, I say this, I know some of it may seem like common sense, but there are folks that do not do it, and they do not discuss it, okay? So presentation of good information and discussion on a regular basis is a tool that we have to use. Some red flags with this tool, with these tools. On the balance sheet, which is a snapshot of your fiscal condition, basically. What to look out for as advisors, we look out for these things. Low available cash, negative bank account balances, abnormally high accounts receivable. Why is there so much money owed to us? High accounts payable, or bills stacking up, what's going on there? Negative numbers in the fund balance and the net income. And what I stress here, and there may be other red flags that are there, but what I stress is it's a thinking person's function, this fiscal management of complex government. We have to ask ourselves when we're reviewing these things, why are they happening? What is the cause, and how are we going to fix them? Don't let things happen to us. Don't let things happen around us without attacking it with our thinking through it. And like I said, we're always a phone call away. We get a lot of people calling with questions on this type of stuff. Red flags with your profit and loss or your income statement. We don't like to see a lot of these. Big transfers necessary to sustain other funds, like the utility fund is funding a lot of operations in the general fund without really making sure that everything's taken care of in terms of infrastructure in the utility fund. Actual revenue falling below budgeted revenue, actual expenditures above budgeted expenditures, spending deficits and those type of things, budget and actual variances that don't seem reasonable. Are there errors? Are we not estimating and planning correctly? Those are the things we have to ask ourselves. Negative numbers, revenues over expenditures, fund balance, operating incomes. When we see negative numbers, we have to ask ourselves, what is that? is that bad? Why is that there? Okay. More so than often, there are times when we'll ask someone, hey, what is that negative number there on the documents you sent us? And they say, oh, I'm not sure, I need to look at that. Well, I would like them to say, ultimately, I know what that is. We've researched that because it jumped off the page at me. So, thanking persons function, this management of complex government, fiscal operational management, it's thinking game. Cash flows tell us a lot. Basically, it's showing what's coming in, realistically what's coming in, and what's going out. A lot of folks do it on a monthly basis, yearly basis. It basically is a tool that will pinpoint how we're doing with our cash. Are we going to run out of money to operate our government? And those are good things to know. I have a bullet here. You see, way too often as advisors, we're cash flowing folks when they're in trouble. And we think that they're getting in trouble financially. And I would suggest to you that let's be a little bit more proactive in cash flow to make sure that, hey, we are healthy. It's okay to cash flow and see you're healthy and to keep emulating what you're doing and going, but early detection is the key there. Some folks ask us what a cash flow is. I've seen so many different cash flows and attempts at it and that type of thing. This is a template we have in our office, and one of our advisors put it together. So if you want to get this template, you call us and we'll even help you populate it a little bit to see, get you started and see how you're doing. But you can see it's pretty simple. You have your beginning cash balances, cash inflows, total cash inflows, and your available cash. Cash outflows, what's going out. And you get down your total cash outflows, net increase or decrease in cash, and then the ending cash balance is showing you what's coming in and what's going out. It's another tool to use, and we can help you with those. In terms of fiscally unhealthy, what does it look like? And some of this seems like just common basic sense when I'm saying it out loud, but I know that when you guys are in your municipalities and you're faced with your daily tasks, a lot of things coming at you. The most simple of tasks become complicated. The most simple questions, the answers become blurry and gray. So we like to talk about it. We like to emphasize the basics here. So what does a fiscally unhealthy government look like? In fiscal administration law, which we'll talk about in a little bit, they actually provide us a definition of what a healthy government looks like. Financial stability is defined as a condition in which you can operate on a normal, regular basis without doing these irregular activities, okay, for the most part. You're not doing substantial layoffs to keep operating normally. You're not restructuring debt all the time to operate normally. You're not stopping or interrupting services that you are to provide just to operate normally. So you're running normally and not having to go outside the scope of business too much to survive is what fiscal administration law is putting forth. And what we always say as advisors, and I put here that you've heard these before because I want to kind of breeze past these because we've talked in trainings over and over about some of these things of evidence of financial instability. I want to get to what our advisors said when we surveyed them. I did a survey to our advisors who have been out in the field with everybody, and I wanted to know what you think is a red flag to you that says, hey, this entity's moving towards fiscal problems are already there and it's worrying them. So these are things we've seen in training, we've talked about before. Not filing financial reports with the legislative auditor. We start looking at that, especially if it's 3 years or more. We start looking at that as a problem, and we know there's financial problems there when those audits are not getting done. That's a good indicator. That's good evidence. Lots of findings and no plans for resolution. That's what we were talking about. You know, evidence of problems when we see lots of findings and folks just aren't trying any way or shape or form to fix them or kind of just lost. No budget or non-realistic budget, that's your basis of municipal financial health. So if we see that, it's not good. Not following the budget and not amending it, you're not using the budget as a tool. So that's more evidence. Failing to make a debt service payment, failing to pay bills on time, including payroll, pension system payment, taxes, workers' compensation, all those. Mounting account payable balances, your bills are just piling up. And then vendors stop providing services and products. We've had calls here lately where vendors are like, we can't provide services there anymore. We can't give them services anymore because they just can't pay us. So that's evidence of financial instability and unhealthy financial municipality. Also, not maintaining utility infrastructure resulting in action by state regulatory agencies. This is a problem across Louisiana. It is a big problem across Louisiana, utility infrastructure. And most of the time when we see a utility infrastructure in decline or having problems, it's real good evidence that financial management is not healthy either. Not collecting money owed to you. That's evidence. That happens a lot. Big accounts receivable balances. Not funding, and I heard our speaker yesterday talk about this, debt reserve, depreciation, contingency funds in accordance with your bond covenants and your regulations, your requirements with your bonds, because you just don't have the money to do it. Borrowing from restricted accounts, and you can never pay it back. When we start seeing that, we know there's some financial management issues going on. Negative fund balances, deficit spending, you don't have enough revenue to cover your expenditures, current liabilities are exceeding assets, poor cash flow, and this one here, one of the most important to me, lack of knowledge regarding fiscal condition. Believe it or not, we go to places and we ask folks how you're doing. Do you think you're going to run out of money anytime soon? Because we're hearing that you may, and they don't know. They say, we're just paying bills best we can. We're not really sure what the balances are right now, here and there, and that's not good. That scares me a lot, more so than the other ones that are much more tangible, I believe, to fix. But when you just don't have any idea of what's going on, it's a little more systematic, and we got to work on that. We can fix it. We can fix it as a team. But that's something that kind of worries me. And advisors. When I say worries me, I mean all our advisors. Now, I sent out an email to our advisors, and the ones that responded to me, I started counting. I'm thinking like, okay, this is like over 50 years of experience that these folks have. And that's a lot, you know. I mean, they've seen a lot. They've been out in the trenches, and we get out there in the trenches. We really do. We've been out in some situations where I felt like I was working at the local government, and it was rewarding. But so we get out there, and I asked them, what are the red flags that worry you the most about someone moving toward declining fiscal health, or maybe even being already in a poor fiscal condition? And I got tons of information from them. And I thought it was great information and agrees with some of the things we've been talking about in training. Yeah, let's go through these. Failure to think about the long term. And I don't want to read everything, but I want to emphasize here because these are their words. A revenue source could be a one-time occurrence. A spike in sales tax revenues may be short-lived. Deferred maintenance will need to be taken care of. There's a $1 million roof that has to be replaced. We got to replace hardware, software, and we're just not planning to do it. Failure to develop goals and objectives on how to reach them. Need to know where you want to be and need to develop a plan to get there. Need to stick to your financial goals through hard times. Agency needs a vision of how things can be. Then the leaders need to rally around that vision and discuss it frequently. I like to say, let's take the politics out of government if we can and focus on the business for the people. It puts everybody on a more of a level playing field than you would imagine, and it is attainable if we really want to do that. So this is a critical thing you need here. But this is a red flag. When these things aren't happening, we're thinking, hey, this isn't good financial management. This isn't good fiscal management. Too much bickering among elected officials and poor communication among agency leaders. You know, you hear a presentation, we're going to talk about financial problems and identifying them and how to fix them. And you think you're going to see a bunch of numbers and charts and graphs and all that stuff and algebra and calculus and stuff, and nobody's going to be able to fix anything, all right? But then it comes down to things like this. You're going to hear this over and over. Too much bickering among elected officials and poor communication among agency leaders. I heard yesterday our speakers talking about communication is what it's all about, right? If we're not all on the same page and we're competing for our initiatives and dollars against what is fiscally healthy, people digging in their heels and fighting just for the principle of the matter, is going to lead to some poor financial conditions, I can tell you, more often than not. Non-compliance with the LGBA, they didn't adopt the budget on time because they couldn't agree. Don't let that budget go to where you're going to get to that 50% rule where you can't spend more than 50% of your last budgeted appropriated amount. You've got to have a good, timely budget because, like I said, it's the foundation of municipal fiscal health, and you have to be able to use that as a tool. When we see that, we get worried. The budget is balanced with one-time money, especially in this day and time when we're all getting some money one or two times. Let's not just count on that as it's going to fix everything. We got to understand that it's non-reoccurring. Governing body not receiving monthly financial reports, so they don't know the final financial position. That's not a good thing to see. Not receiving budget to actual figures and not discussing them. We talk to boards so much and management so much that listen, talk about it. If you're in a meeting and you think talking through those things is going to, increase the attendance to 500 versus 100, that's okay. Government in the sunshine is good. Those crowds will dissipate after a time when people have greater trust in you for discussing that kind of stuff. Discuss those at meetings. They're great tools. When that's not happening, we get worried. Large variances between budget and actual could indicate that we're understating or overstating our projections. Not performing routine bank reconciliations. You gotta do those so you'll have good information to make decisions with. And then making poor financial decisions. That's a big deal. You're charged with making right financial decisions. Issuing debt to construct a building but failing to have the revenue to insure, maintain, and operate the building. You're granting large raises and then we have to lay off people down the line. We got to get out of that kind of thing. We've got to talk publicly about it in our entities that that's a bad thing, no matter what. If it's popular or not, if people holler at you or not, you've got to talk about this. If we're not talking about it and professing the importance of something like that we have to make good, sound financial decisions on a daily basis, then we should get worried. You should be able to say that. Anybody in your organization should be able to say that to one another because you're supposed to be on the same team. And if you ever need help saying it to someone, you can always call me. I love to call people and say, listen, that's a bad decision, what you're doing there, in my opinion, because financially, this is what's going to happen. So we can help you with that too. If you can't pay bills, that is a sign, of course. Late fees, you start seeing late fees, not good. Having to borrow money just to get by regularly, non-compliance with debt covenants like the attorney was talking about yesterday, red flags. Not having sufficient reserves to weather economic downturns or unforeseeable expenditures. As the world's changing and it's very volatile, we need to have these type of things. The mindset has got to change that surplus is for spending. Surplus may be for safety. Let's build the reserves. When we see no cutoff policy at all, or people are not following their cutoff policy for utilities, that worries me greatly because I know it's coming next, or I know it has already happened. And we're not funding our utility system the way we need to. It's going to go into decline, and we don't want to find ourselves in fiscal administration meetings and things like that over this, getting administrative auditors from LDH and DEQ and all those type of things. So that worries us. Got to keep up the revenues to cover those costs. Too many transfers, general fund being subsidized by utility fund being subsidized by general fund. Why aren't the funds self-sustaining? There may be reasons why you are transferring and they're proper, but just make sure they are. When we see a lot of them and they're not really explained well, we get worried. Act 98 of 2021 regular session is going to go into effect in 2023. LDH is going to put out grades for water systems. If you get a D or F, I don't think you're going to be able to use money in the utility fund to move over for general operations. You're going to have to use them for utility-related expenditures. So that's something to keep an eye on. If you haven't gone to look at that act from 2021, I would go look at it. If you need help understanding it, you can call me in the office. I'll pull it up. We can run through it, and we have contacts at LDH that can help us with that too. When we see crumbling and poorly maintained capital and infrastructure assets, those are red flags. Interesting point from those in the trenches. When I go out there and Google all the associations, governmental associations, experts in the field, that type of thing, their comments, their suggestions, their information is agreeing with the practitioners, you all, what the advisors that are in the trenches with you all, what we're all seeing. So sometimes we think that the advisors or auditors might be nitpicky, but this is an industry that is agreeing pretty much in good governance, the industry of good governance and oversight and that type of thing. It's all agreeing, so that's a good thing. And I'll share some of those points with you in a little bit. So why is it important to be fiscally healthy and so concerned with it? I think it's a simple question. It might seem like just a basic answer, an elementary discussion. But again, when we're in a complex management system in municipalities, things get a little blurry. So let's talk about it. This is what I want to stay away from. Fiscal administration. I've been involved with fiscal administration, Fiscal Review Committee, which is the legislative auditor, the attorney general, and the treasurer. They can come together in the Fiscal Review Committee and hear financial matters on certain entities, and if they are financially unstable, they can vote to put a fiscal administrator in place. That fiscal administrator comes in and is basically the end-all be-all. They trump the mayor, the council, the staff. They are coming in to take the politics, the emotion, everything out of the running of the government and put emphasis on the business side of it to ensure that the residents are getting the services that they deserve to get, because we have to have good financial management to do that. The criteria that can put you in fiscal administration, they vote on one of these unanimously. Only one has to be voted on unanimously, right, by this committee. So let's look at what it is. It's echoing what we've been talking about. If they're fiscally unhealthy, this committee deems that in votes, the political subdivision is reasonably certain to fail to make a debt service payment. Is that happening? The political subdivision has failed to provide an audit for 3 consecutive years. Disclaimer does not count as an audit. Okay, if you're getting a disclaimer, it does not qualify as an audit under the audit law. The political subdivision can't pay its bills. Reasonably certain to not be able to pay its bills. Those are the criteria that they look at and vote on to put a fiscal administrator involved. Look, I've been involved with it, and we have had those that have been in fiscal administration, and we have 2 of them that are actively in fiscal administration. If it's absolutely needed, like in these particular cases here, and we decide that a fiscal administrator is needed, some good things can come out of it. Right now, fiscal administrators are working diligently with Clarence and Powhatan to get them on a right fiscal foot. But I want you to be the fiscal managers that take care of all of that so that that never has to happen, okay? And we're gonna work with all of y'all. We're gonna bend over backwards before we start moving towards that fiscal administration. We're even employing some pre-fiscal administration type meetings at our office and stuff to let's try to stay away from that as much as we can unless it's absolutely needed. But you can do what a fiscal administrator would do and stay away from that. So that's an important reason to be fiscally healthy. Also, you're the steward of the people's money, and that is a big, huge responsibility and honor. I don't like it when I hear folks kind of down on their jobs in government, because what we do every day is very, very important. And being a steward of the people's money and managing their money is a big responsibility and an honor, and that's a reason to be fiscally healthy. How you fiscally manage affects people every day. How you treat them in the office when they come to see you affects them every day. Same with us. Everybody who calls me, I don't care who they are, gets respect, the same level of respect. And we just got to make sure that our management activities are proper, because what we do, like I said, on a daily basis affects all of our residents and citizens. And when people are affected bad, business is not attracted. And I've heard so many folks sit around the table and say, well, we're going to get out of this hole because we're going to get a Walmart and we're going to get a this and we're going to get a that. But if fiscal management is bad, it is not going to, we only have 10 minutes left? Oh my gosh, okay. All right, so we know why we have to be fiscally healthy. Man, that goes by quick. So strategies to get there. Can we move away from a fiscally unhealthy entity? Can we get out of it? Yes, we can. There are strategies out there. Tone at the top, you heard it yesterday. It's very important. We have to be a team that comes together and works together to fiscally manage correct, especially if we're moving towards a hard road there. Are we already there? We have to work together. And you can see these quotes point that out. The one I like the best is, it's amazing what you can accomplish if you don't care who gets the credit. So we have to have leadership. We have to have teams within our organizations. Every one of you within the organization, I think I heard that from a speaker yesterday, has to have the mentality that we have to work together as a team to get to where we want to be in a fiscally healthy manner. These are some quotes from some business folks. Risk comes from not knowing what you're doing, like not knowing what your financial condition is. Going into debt usually isn't caused by a lack of money, it's a lack of vision. Management is nothing more than motivating people. Working as a team to define your vision and mission, and working cooperatively to implement missions, goals, objectives. Got to do it to be successful programmatically and financially. If we have the best folks in the organization that you can have, and we got a lot of money, and we have good controls in place, and then there is just a terrible tone at the top and people are fighting and not working together and communication is stopping, fiscal and programmatic problems will follow. I went to a restaurant with my mom and we were eating in there, and I looked and saw this on the wall, and I went and talked to the manager leaving. I said, hey, that's a neat sign you got there. It says, coming together is a beginning, keeping together is progress, working together is success. And I got a dissertation from this manager of the restaurant on teamwork and how if we don't have a good team, then everything else falls apart. If our food's great, but the service folks are behind and rude, we're going to lose business. I was just amazed. And I thought to myself, I said, restaurants are important. I mean, look, you can tell I like restaurants and I think they're important, all right? But government is doubly important and doubly complex, but I don't see many signs like that anywhere in government offices. I just want to see more of those signs, and I want us to talk more that talk and walk that walk, because that restaurant was running very efficiently and effectively. Some more strategies that you can employ to move forward in a fiscally healthy manner or to get out of a bad way is work together to pass a timely, realistic budget. Adopt it annually. It has to be balanced. It has to comply with law. We have a template out there that will help you You can pull that up on our website and call us, and we will help you populate that. It has to be realistic and based on sound estimates, and you have to use it. The budget cannot be plugged. The numbers cannot be unrealistic, and you have to monitor it and use it to drive your decisions on a daily basis. Also, a truly structurally balanced budget is one that complies with the law while supporting financial sustainability for multiple years into the future. We need a structurally balanced budget. We can't, yes, we have to do it legally, and that's a good thing. We want to legally pass budget, but we can't pass budgets with things like one-time revenues and put it on an expenditure that occurs all the time and think that it's fixed. We got to be thinking, okay, yeah, it's going to cover it this year, but what's going to happen years down the road? So we have to be thinking that way. Think about a true structurally balanced budget as one that complies with the law while supporting financial sustainability for multiple years to come. A thinking person's game. GFOA says that you should, Government Finance Officers Association says that you should have some padding there in your budget to make sure, they're suggesting 2 months of general fund operating revenues and expenditures. And what I wanted to point out here is they're promoting safety in the budget. If you have surpluses and things like that, you have money, don't just spend. Let's put some money in there to make sure that if things go astray, that we're going to have revenue that we can reach down into and use. We don't want to be caught with nothing in a time of an emergency or something like that. Keep accurate records to allow financial reporting and auditing. You got to have good information. If you don't have good information in your office, financial information that you can get your hands on in a timely manner, I would say go back to your offices this afternoon and next week and carve out some time to start making it so. It's very important to have information to drive your decisions. Please present the budget. Please present this information on a regular basis and discuss it. Again, these are items we think that should be presented or could be presented. You can think of other items that could be presented to your board and discussed. Income statement, balance sheet, accounts payable, what we owe, what's owed to us, analysis of variances with recommendations for corrective actions. If we see negative things happening, variances, we're pinpointing them, we're discussing, we're proposing resolution, we're thinking through these. Cash flows, and those type of things. Even put in your policies and procedures, if you can, what you're to present at meetings and that you're to discuss them. So, of course, we should aggressively collect what is owed to us using collection agencies and payment plans. Don't just let payments sit out there that are owed to the government, okay? We have to maintain our utility infrastructure. We have to increase rates. Work with Louisiana Rural Water Association, even if it's politically sensitive, if we can't cover the operations of our utilities. Also, have you aggressively explored all funding options for utilities and just general operations in your government? You have to be thinking about this on a daily, weekly, monthly basis. I wanted to point this out. The Louisiana Infrastructure Technical Assistance Corporation is a new program that's a joint program by the Louisiana Police Jury Association and Louisiana Municipal Association. Karen White was telling me in 2023 they're going to send some, advisors, grant advisors out to local government, and I'm getting my minutes tagged over here. So, they're going to send out some advisors out there to help you secure grant funding. She helped me put this slide together, so go on their website. There's a lot of good information, but we should be thinking about what available funding is out there to help our governments do what we have to do. We should be thinking about that all the time. That is a strategy. Don't use those utility revenues to support other funds when you have things that need to be taken care of in that utility system. Please think about the long-term maintenance that's going to be necessary. Remember Act 98 from 2021 and go look at that, and we can talk about it if you need to. reduce expenses when times change, when revenues change, and use your one-time monies in a smart manner. Here, I wanted to point out when faced with the need for revenue increases and or expenditure decreases, you must put pencil to paper. I've talked to so many different officials who said, yep, we're going to get rid of that deficit, we're cutting cell phones, and we retired a police car. And I'm like, okay, does that get rid of the deficit? Well, we think it does. Okay, well, we need to put pencil to paper and plot it out. You need to show us that what you're going to do in response to a deficit is actually going to take care of it. Also, yeah.
You better get to say this, I'm sorry, I had to step out. But it's more than showing us, it's a mandate in statute. 5% requires it.
Okay, yeah, the 5% rule with the budget. Yeah, okay. That's what Jennifer says. There are the requirements in the statutes for the 5% rule when you're amending your budget. Yeah.
Well, it's for increases or decreases.
Okay. Okay. Again, stressing the interesting point that what we're seeing as advisors and what we're recommending is agreeing with the industry out there, with industry experts, associations, and things like that. I'm going to just kind of breeze through these, but the International City County Management Association is agreeing with us. They're saying if you start thinking through issues in your municipalities by addressing questions like these, you're going to be able to identify poor fiscal health, poor fiscal management practices, and you're going to be able to start moving away from that. Okay? You can see that some of the things they're saying here are what we've been talking about. The Government Finance Officers Association also is agreeing with what we're saying, and we're agreeing with them. And they say that financial recovery is a process of recognizing, arresting, and reversing a pattern of financial decline. Recognize financial distress exists and convince colleagues of this problem. Diagnose the causes. Plan to fix them with short and long-term planning. I mean, that's what we've been saying. And even GFOA is saying that tone at the top and teamwork is critical here. They point out ways or reasons why fiscal distress is occurring. One that I wanted to point out again, GFOA is saying suboptimal working relationships between boards and staff, lack of capacity for innovation. Those are the things that are causing fiscal distress, and those are within your control by just working better as a team. That's a strategy to get more fiscally healthy. More strategies to recover that they're presenting. Ones that I wanted to focus on. Examine leadership and management practices that contribute to financial distress. Unclear lines of accountability, lack of accountability, getting results. Those are items, strategies that are practical and they're tangible and they're within your control. I mean, all you have to do in that regard is start working more as a team, more effectively as a team. And I think you'll fix a lot of your problems. You'll start moving towards fixing a lot of your problems. And you have to start rethinking your revenue. What's happening and what will happen to our property taxes, sales taxes, fees and fines, franchise tax. The world is changing. Business is changing. Property ownership is changing. We have to always be thinking. Remember, it's a thinking person's function. Always be thinking about our revenue streams and what is happening to them and what may happen to them. And GFOA points that out to us. Remember, success attracts success. Go out on the internet and Google it like our speakers were saying yesterday. Just Google why you need to be fiscally healthy for business, and the information out there is unbelievable. But you can say the first step toward becoming a great place to do business is to be a great place to live. And without leadership and without fiscally managing and programmatically managing in a correct manner, you're not going to attract business. I've heard, like I said, a lot of municipal officials say we're going to get out of this hole by getting these folks here in our community, by getting this business here. But if you're not managing, if that government is fiscally unhealthy or programmatically unhealthy, and they see this, and it does not attract business. I tell folks during fiscal administration talks, like I just kind of did earlier, replace the politics with the business for the people. It goes a long way. When you think about projects to undertake, think about the revenue you have and your expenditure demands. We can't just go through the motions without thinking through this. We really can't. We have to think through it. We have to work as a team. We have to ask ourselves, when we're pushing for our initiatives and we're pushing for our projects, do we have the revenues to cover it? And if we paid all our bills right now with what I'm pushing, what would we look like? Would it be really bad fiscally for us? We have to start thinking and working like that together. Remember these quotes? They're important. I put together a list. I just started jotting out a list. If I was in your shoes, what would I want as a checklist to remind me of the questions that I need to think about every day, every week, every month, every year? Okay? And these are them. And you can read through them because I'm running out of time. I know. Number 14, that's the important one. What we're doing as a government, is it going to attract residents to stay, to come, business to stay, to come? If the answer is no, try to turn it around. I'm going to stay around and we can talk if y'all need to, and of course, call, email, all that good stuff. Here are all my contact bits of information. So 50 minutes is not a long time. All right, thank you.